All right. Well, thank you everybody for attending. We've got a really good turnout on this webinar. Um, so I hope we're bringing useful content. We've been getting a lot of feedback from our webinars, and that's what's been driving our discussions. And the questions that we've been getting asked lately is around the payroll protection program. So I'm very happy to announce and introduce Jack Tanis, who's going to be leading most of this webinar. He's going to be joining us from Beyond Taxes. So, you know, a lot of the questions that you ask on a regular basis to our client service reps on a day in, day out basis, a lot of them we can't answer just because we don't necessarily have all the information. So we've sponsored this webinar and brought in an accounting firm, Beyond Taxes, and we are going to be offering a series of webinars around this, around the PPP loan to follow up, because there's a lot of updating information. We're also working in the system to be getting better and better reports. There's actually a new data export available that I'll talk about at the end. Again, we're just really excited that you're joining us. We hope this is useful, but please ask questions. Please give feedback. There's a Q&A box in Zoom that you can click on and ask any questions you want. We won't necessarily answer them all, but we'll try to get to as many as possible. And again, just ask those questions. And as always, you can email support@beyondpay.com. But again, I hope this content is helpful. And here's Jack Tanis.
Good morning, everyone. Thank you for coming this morning. We're very happy to hopefully be able to talk about in an intelligent way the payroll protection program. As John said, Beyond Taxes is our CPA firm moniker for Tanis Group, and Chris and I are the members of that CPA firm, and actually are the parent. What originally spawned Beyond Pay. So if you're not familiar with that, we all are housed in this same office here in Clinton, although for the last several months it's been fairly a skeleton crew here with all of our people going remote. So today our objective is to talk about this payroll protection program, and many of you have already received your loan proceeds and now are wondering what needs to happen. So that's what we're going to try to address. And our goals are, first of all, to address some uncertainty around this. There's a lot of different news reports out there with misinformation and with good information, and we're hopefully going to help you work through some of that uncertainty. We hopefully will relieve some stress. I know these are trying times for all of us, especially in this Northeast area, and one of our objectives is to relieve stress. Hopefully we'll eliminate some of the complexity that comes with some of these calculations. Everything's happened very, very quickly. The law was passed the end of March. This program went live on April 3rd, and here we are only 5 weeks later, and we're trying to figure everything out. And we're hopefully helping you reestablish some control. I know in our situation, we feel out of control a lot of times during the day. So we're hoping that this will help you gain some control, and hopefully will help you save some money, or maybe find a way to get some of these loans forgiven. So that's kind of going to be our focus today. And like John said, we're going to entertain some questions. Hopefully, some of you submitted questions along the way when you registered, and hopefully we'll address a lot of those during the presentation, and maybe a few of them afterwards. So with that, we'll move on and get into the Payroll Protection Program, or PPP. Okay, so I'm going to start with a disclaimer. I hate doing this, but it's just not possible to cover everything, every aspect of the law and the regulatory changes, because they haven't been issued yet. We're hoping to bring some clarity to what we understand from reading the law and from what has been published, but a lot of it's just not there yet. So we're not giving legal advice, and please contact an attorney for that. And the actual rules for PPP loan forgiveness have still not been released by the SBA, and new regulations are expected that may materially change the information that we're presenting today. So as much as I hate starting that way, I think a common theme today is going to be, we're just not sure. And at the bottom there, it says, those new regulations are expected. They were originally indicated that they were coming out on April 26th, and they have not been released yet. So the Paycheck Protection Program. So it's designed as an incentive for business to keep their workers on their payroll. One of the questions that often comes up is, if they're collecting unemployment on my account, can I include them in the forgiveness? And the answer is no. The idea behind all this is that you are continuing to pay your employees, and that is the incentive for this program. The SBA will forgive the loans if the employees are kept on the payroll for 8 weeks and the money's used for payroll, rent, mortgage interest, or utilities. And we're going to expand on each of those areas a little bit throughout during this webinar. You apply through an SBA 7A lender. So that's most of your banks are participating in that, and I'm presuming we're operating from the premise right now that you've already done that and you've gone through that process. That process was different for every bank. It was different for every, even over each week with every bank, because they were developing it as they go. If you remember, this all started on April 3rd, and they ran out of funding basically within the first weekend. And then I think it was around the 27th, they got another level of funding last week or so. And the program is available through June 30th. I read something this morning that they announced that there's still $100 billion available. So the second wave did not exhaust the funds as quickly as the first wave did. So if you haven't applied for your PPP loan, there is apparently still time to do that. I would have guessed that from what I had heard, with the backlog of people that hadn't heard on the first wave whether they got the money, that this was going to be exhausted fairly quickly also. But just keep in mind, again, I said how each process was different with each bank. A lot of the questions that each of those banks asked you to give, whether it be reports for payroll or what period of time should cover you needed to cover with the reports you gave them, that varied, and they were guessing in a lot of cases as to what they really needed. And some of them were mixing and matching what they need for the forgiveness calculations later with what they need for the loan application. So we've learned through our clients that a lot of people got what they asked for. So a lot of people got less than they asked for. And different banks use different criteria to determine that. And a lot of people, I think, accepted lower numbers simply because if you didn't accept what they offered you, you got to the back of the line and there wasn't any guarantee that you were going to be back in the queue. So presuming at this point, we're going to go on the basis of presuming that you've already gotten a loan. Now, I'm going to give you my Reader's Digest version of what you qualified to get a loan. And basically it was 1 month of payroll expenses from 2019, and limiting each person to $100,000 annualized, and then adding in your employer share of medical expenses, retirement, and state taxes. And that times 2.5 is what you should have qualified for a loan. And we'll expand on that a little bit more and the rationale behind that.
Jack, I just wanted to check to make sure the slides are moving.
Oh, yeah, I haven't moved them.
Okay.
So try this now. So now I've moved one.
Okay, great.
Okay. So now we're, so with the PPP, you had to meet eligibility standards. And I don't know if you've probably all heard in some of the news reports how some larger companies seem to get money that, and public companies received money. And that, so I just want to re-emphasize that that point about the meeting the eligibility standards, they did allow for sole proprietors, independent contractors, and self-employed persons to be included in this PPP with or without payroll on their other employees. So we'll talk about that some more too. Forgiveness requires at least 75% of the forgiven amount to be used for payroll. And that's defined several different ways. The loan payments, if you're, for whatever's not forgiven, you don't have any loan payments for 6 months from the day you got the money, and there's no collateral or personal guarantees required. And the banks and the government are not charging loan fees. And then the loan has a 2-year maturity once you start paying it, and an interest rate of 1%. So that's kind of the overview of what qualified, but the eligibility standards are now in the news because you're seeing there's this rule about giving the money back if you didn't qualify, and it's scaring a lot of people because I don't know about you, but I know a lot of the banks are sending out kind of disclaimers now saying maybe you better give the money back, and we're just not, I think in most cases that's not going to be necessary.
And there was an express, I'll just add there was an express regulation about auditing loans above 2 million. So that seems to be the threshold that they're going to be scrutinizing more, which probably doesn't apply to most of our clients. But if you're over 2 million, there's going to be extra scrutiny for sure.
There's going to definitely be an audit over 2 million, but they also said they're going to be randomly doing under 2 million. I think that that was just to keep everybody honest.
Sure.
So let's talk about the forgiveness for a few minutes. Okay, so the full principal amount of your loan plus the accrued interest can be forgiven if the borrower uses the proceeds for forgivable purposes. And employee count, I'm going to add there, and compensation levels are maintained. So the day you got the money, an 8-week period begins, and now we have to take a look at and consider your payroll costs, your rent, your mortgage interest, and utility payments to calculate your potential forgiveness. There's pretty much universal consensus that you can't prepay expenses, so you can't pay a year's worth of rent and get it forgiven. And by the same token, I believe you can't catch up. Like if you didn't pay your rent for March, you can't pay that and count it towards your PPP forgiveness. But again, we're going to expand on each of these areas a little bit. So let's look at the payroll costs first. So the payroll costs need to be 75% of the forgiveness amount. And if you think about what I explained before, what you qualified for, if you think about you got 2.5 months times your payroll costs as your loan proceeds. In essence, now you're dealing with an 8-week period, so which is about 2 months of payroll. So the additional half month was to cover these other areas like your rent, your utilities, and the things that were added on later. So that's kind of the rationale behind this. In other words, it's mostly got to be used for payroll. And they wanted you to maintain head count as well as dollar amounts. So that becomes important as the calculations are looked at later on. So the first thing that's included are salary, wages, commissions, tips. And again, you have an annualized cap for each person up to $100,000. And you probably went through a lot of that when you were doing in limiting people to the $100,000 when you were doing your application. And it's the same principle on the forgiveness calculation is, so during the 8 weeks period, it's only the amount up to whatever annualized, the annualized amount up to $100,000 for any one employee. And then you can include your employee benefits in this payroll number, which includes what the employer pays for group health premiums, what the employer pays for retirement benefits. This has nothing to do with what you withhold from your employees for those two things, because that's included in their salary or in their wages. So It's really just the employer share. And for those of you that are beyond pay clients, you know, if you've and you've taken advantage of our ability to you know, to upload all your benefit plans into the system, a lot of your payroll reports will show the employer share, and a lot of those calculations are done for you as opposed to doing it after the fact. And we'll talk about some of the documentation as later on. You can also include your state and local employer taxes assessed on compensation. So these are your state unemployment and those types of fees that not federal employer taxes. So your Social Security match, your Medicare match are not included in this number, but the state numbers are. So whatever the employers in different states have different rules on that, on what the employer has to include. So those are included in this 75% calculation. I did see one question in the registration asking about what if you're self-insured on the unemployment, and I believe that and are they included in the PP calculation? And I believe yes, that and we're going to, when we talk about these insurance premiums, the group health, for example, there is speculation, and again, the regulations haven't come out, but there's speculation that that group health concept includes dental. If the employer pays it, it would include vision. It would include, and some are going so far to say it includes all kinds of insurance, like liability insurance and everything, because the language in the law wasn't very refined, but we'll see where that comes. But I'm pretty sure that the unemployment compensation, if you're self-insured, would be included in that. And then if you're a sole proprietor or independent contractor, your net earnings from self-employment would be capped at the $100,000 also. So, and that's part of payroll. In other words, if you are on a Schedule C and you have a net income that you've probably showed on your 2019 taxes, your 2018 taxes, we're not sure how they're going to regulate this 8-week period. In other words, if you're capped at $100,000, but you only made $35,000 for the last 2 years, I'm not sure that you're going to be able to get to forgive $100,000 of the PPP relative to your wages by taking a draw of $8,000 a month. But we don't know what the details are. That the speculation by most of the people that I've been watching and listening to is it's going to have to be similar to what you had been doing in the past on a net basis. But that makes the calculations a little more complicated from a standpoint of you're dealing with net earnings from self-employment after all of your other business expenses. So a little bit out of the scope of what we're going to try and cover today. I wanted to spend some time on the, well, before I go to this definition of utilities, I wanted to just mention the other thing when I mentioned before about the rent being included. The way the law is written, it says rent and leases, and there is also speculation. So as we begin to talk about documentation, everything, there is also speculation that like equipment leases are going to be allowed. If you had an equipment lease that existed before February 15th, along with your lease for your building or your mortgage interest on your building and things like that, that there's a chance like copier leases or computer leases or truck leases or may be able to be included in the PPP calculation. Again, they'll be limited to the 25% when all is said and done, but just keep in mind as you begin to gather information and supporting documents that there's a chance you can bump that number up with some of those other leases. So this was an interesting thing to me. In the definition under SBA's definition of utilities, they included phone, they included internet, electric, gas, water. Okay, those kind of make sense. And then they put this thing, etc., but which they listed and didn't really define. So what does that mean? We don't know. Maybe your garbage pickup, maybe your website maintenance, maybe we're not sure what else is going to be allowed under this. But keep in mind that that the important thing is that they did clearly establish that this is stuff that had to be already in service or agreed to before 2/15/20. So one of the questions that keeps popping up is, hey, I got internet service for all my employees because they're all working from home and I'm reimbursing them for internet. Can I include that in my PPP because it's a utility? And the answer is no. Because it had to have been established before February 15th. And so that seems to be a consistent thing that seems to be coming through most of the language and literature, that as the regulations are trickling out, is new stuff is just not going to be allowed. One of the questions that was in there, what if I have to buy PPE? Which is a whole new meaning from the old accounting. It used to be property, plant, and equipment. Now it's personal protective equipment, I guess. That won't be included in our utility cost or in our PPP definition of forgiveness, because it wasn't. Chances are you weren't buying that ahead of time, and it wasn't a regular subscription. So all I can say on the utilities is stay tuned, but it's pretty broad in what can be included in there, as long as everything was in place before. And the same, and so I want to extend that concept to the self-employed people to keep in mind, because it seems that people feel that you have to have deducted those things. So if you're not, taking a home office on your Schedule C in 2019, you're not going to automatically be able to include your utilities now because you're working from home in 2020, because you weren't establishing that as a business expense by February 15th. So in light of the tax season being extended to July, if you're a sole proprietor or self-employed person, and there's still the opportunity, you haven't filed your return, you may want to consider seeing if there's a rationale to include your utilities on your tax return for 2019, because that'll be a good supporting documentation to say that I was in business there beforehand. But again, that's kind of a little unofficial commentary, if you will. So let's go to the forgiveness. The forgiveness concept is after the 8 weeks from the day you got your loan, you can submit a request to the lender servicing the loan, who serviced your loan, for forgiveness. Now, first of all, the SBA has not come out with what the criteria are for forgiveness and what the documentation requirements are. So therefore, neither have the banks. And just as your applications were all different by each bank, I believe that the documentation requests for forgiveness are going to be different for each bank. So we're going to give you some principles in a little bit of what you need to start gathering, what we think you might need to start gathering. But again, each bank may be different in this. And the reason I say that is it appears that the way this is going to work is that the lender, the bank that you got your money from, is going to make the decision on the forgiveness amount. And they have 60 days to do that, as you see at the bottom of this slide. However, the SBA has 10 years to audit that. So we don't, and my guess is because of that 10-year look back that the SBA is leaving in their quiver, my guess is the banks are going to go overboard in what they're going to require as far as documenting this forgiveness. They're pretty much off the hook. If you read your loan application and all the work, they kind of were able to say, we can rely on you, what you say. So I don't think the banks are on the hook, but I have a feeling when it comes to this forgiveness, they're going to be requiring recertifications of the documents are true and things like that. And all that to say is keeping good records and organizing yourself. This is an opportunity to recommit to that, because I just have a feeling that this documentation requirement although we don't know what we have to document yet completely, is going to be fairly thorough. So just keep in mind that 10-year window that the SBA has given them. Now, I believe, like Chris said before, that the $2 million ones are going to be scrutinized first, but there will be the potential for them over 10 years to look at smaller loans also. Okay. So maybe why don't we stop for a second and take a look at if there's some questions before I start. And I've got an illustration in a minute of some of the mechanics of how I think the forgiveness is going to work. Okay, so a couple questions that have come in. What period could the PPP money could be used? Okay, that's a good question. That's one that seems to be popping up all over the place, because there's some people that are saying you have to use all the money in the 8-week period. And I don't believe that's true. I believe that your PPP money has to be used for payroll primarily. That's the affidavit that you sign on your loan application. However, you can use it for payroll after the 8-week period, but it's not going to get forgiven, and you're going to have to start paying it back in 6 months. So, and then you can also use it for the things that we just talked about: the rent, the mortgage, utilities, and anything that will qualify under that. Another question that came up is, can the money be moved to another bank? And that's one of the where interest is better. And I don't see any reason not to do that. There are banks that are saying you have to have a separate bank account. We've actually had a lot of people trying to say they have to run their payroll in a different bank account for this period of time for 8 weeks. I think that's a misinterpretation. It's gone overboard by the banks in saying that you have to do that. Money's kind of fungible in that, and so I don't see any problem other than the fact of a tracking mechanism. For example, we have some people that we've talked to that are just leaving it in an account and then transferring approximately the right number so they over to cover payroll, rent, mortgage as they pay these things, utilities, so they kind of have a feel for what might be left that they need to cover, and hopefully we get some more answers to that. But I don't necessarily see that you could, because even in covering a payroll, there are employer taxes there in covering your payroll that aren't included. There are people that got paid over $100,000 that aren't included. So it's not a simple thing to just run your payroll out of that, and it's not perfect and to the penny. Another question, you mentioned state taxes are included. Can you clarify if it's all state payroll tax inclusive of state withholdings? And the answer to that is, again, no. It's only the employer's share of the taxes that they are paid. It's not the withholding. And another question that came up is, sorry I missed this, but did you discuss when incurred versus paid? And that's kind of the big question that we don't know the answer to. I'm going to take the position as of now to say it's a think accrual basis. So what happens over the next 8 weeks is what you're going to be able to do as long as you pay it. So we don't know if you're going to have to run a special payroll at the end of the period to cover, to cut off on the exact last day of the 8th week. But incurred and paid is what the language of the law says. So if you took a real liberal approach to that, you might say, well, I just paid a payroll the day after for the 2 weeks prior, and it's paid and incurred. I don't think that's going to fly, but I'm not sure. So I think at this point, you think accrual basis and hope for more.
And I'll add some color to that. From the interpretations I've read, the spirit of the law is that it'd be normal expenses within that 8-week period. So prepaying things probably is not going to be acceptable. So paying your medical insurance several months ahead, or adding an additional payroll in or squeezing it in. But the accrual, as far as a few extra days in the pay period, yes, maybe. But as far as moving expenses into that 8-week period that normally wouldn't be there, it's probably not going to fly.
Great. All right. So I'm now going to, what I'd like to do, and this may answer some of the other questions that have popped up, because there's still a bunch of unanswered questions. So we'll try to get to as many as we can. Let me just, I think I got ahead of myself. Okay, first off, I want to go to a worksheet that I want to illustrate some of this for you. Let's see here. Why am I not getting my screen here?
Oh, you just want to do F11.
There we go. Okay, thanks. Okay, so I want to come over here to a worksheet that we've put together for you, and we're going to try and make this available.
Yeah, we're gonna share this worksheet with everybody on the webinar. We'll provide a link to this, so everybody can kind of take this away, and basically you can make a copy of it, so you'll be able to use it for your own purposes. Or if you prefer to use Excel versus a Google Sheet, you can just save it as an Excel file.
John, I also lost my tabs at the bottom. Is that the?
You see in the upper right corner, there's a little arrow pointing down right there. Demo demons.
Demo demons.
Try not maximizing your screen. It must be just hidden off the view. And then maximize it again.
I did that.
Here, if you want, why don't I share it? I got it up on my screen.
Okay, great.
So we'll kind of present remotely here for a second. All right, so just Jack, stop sharing your screen in the Zoom thing.
Stop share. Okay.
All right, and then I'll share my screen. All right, so you should be able to see my screen now.
Okay, John, if you go over to the summary, please, at the last one. Okay, everyone, sorry about that. But this summary at the end is kind of what our objective is. So I'm just using as an example a loan amount of $100,000, and then during the 8-week period, and we're going to go through each of these elements a little bit real quickly, you're going to have your payroll costs that you spend during those 8 weeks, your non-payroll costs from the spending, which are those rent, utilities, and mortgage, and that is your potential forgiveness. And then there are 2 calculations that are involved in reducing that forgiveness, and those are based on your full-time equivalent employees, and then based on compensation. And I just want to qualify that one, because that's the one that I don't believe there's very much guidance yet on what that included. if you remember some of the 75%, there's language in the law that talks about if you reduce anyone's pay by more than 25%, that you're going to lose forgiveness on everything that goes below 75%. And I'll show you what I mean by that. So under this scenario that I have on this example, you borrowed $100,000, you'd have $77,000 forgiven, and you'd have to pay back the $22,000 over 2 years, beginning in November, December, somewhere 6 months from now. Okay, so how do we get to this summary? So John, if you go back to step 1. So step 1 is our cover sheet, which basically kind of reiterates what we just talked about for the last half hour. And so we start this 8-week period, and we enter our loan amount in of $100,000 and the date we got the proceeds. I just entered, and all the yellow fields when you get your copy are your input fields. And so you enter your loan amount here and your date, you got the money. Step 2 is your full-time equivalents. Now, we don't know, again, the regulations have not been published what that means. Under ACA, 30 hours was the full-time equivalent. So we're operating, and it seems that most people are thinking in terms of that. So the way this worksheet was set up, the way we set this up was basically using 30 hours as a full-time employee. So if you think about, and then so what the law said was you have 2 periods you can use as your baseline. Baseline number 1 is your payroll from February 15th, 19 to June 30th, 19. So under my example here, you see I just said we had 10 full-time employees, and so I threw 30 hours in for each of them for all the weeks of that time period. Now, you'd have to go back into your payroll reports and determine this number. And then if you have a bunch of part-time people, you know, if you're putting in 15 hours each week for this person and 15 for another person, that would end up with it, you know, basically one new full-time equivalent. So you look at that period, which is basically the equivalent period last year. So the idea that they're thinking in terms of is, how do you compare to last year? And that's where the seasonal concept comes into play. So if you're a seasonal employer, January, because if you look at baseline number 2 down below, it's January through February of 2020, just before this whole COVID thing hit. So if you're seasonal, that might not be indicative of what's happening in April, May, June. So that's why they gave you the option to use those other dates. So basically under my scenario here, I said we had 10 employees last year in 19, but this year we only had 8 full-time employees for January and February. So so now what's going to happen is we're going to be calculating what our full-time equivalents over the next 8 weeks are. And you can see I threw some random numbers in here saying, and I came up to 7.75 is my average full-time equivalent during the 8-week period. Well, now I get to use either one of those, whichever works best for me, in my calculation. So if you take the last year, I was only 77%. But if I use my 8 employees for baseline 2, I'm at 96%. So that's better for me. So that tells me that I have a maximum forgiveness of 96%. So the idea is if you maintain your head count under this test, you will get the potential to have 100% of your PPP forgiven. Okay, so you can see there I said, so I'm going to pick the maximum one, and that's limited to 100%. They're not going to give you extra money if you go over your head count. So under this scenario, I'm going to say the non-forgivable is 3.13%. That's the number that's coming over to the calculation that I showed you before as a reduction. 3.3%. 3.13 on screen 4, John, on the summary, or I'm sorry, the 5th summary. that's what's generating that full-time equivalent reduction. So it's taking that 0.3% times the total eligible for forgiveness, the 82.5, and that's what your reduction in forgiveness would be because of your full-time equivalents dropped. Okay, so that's step 2 of the calculation.
And just to reiterate, we're not positive about this 30 hours.
Correct.
So that's what the SBA has used traditionally. That's what ACA went with, but we don't have any guidelines on what full-time equivalent hours threshold needs to hit.
Right, and the other thing that happens with that is I know one of the questions that came in originally was relative to piecework type employees or project-oriented employees, and all I would say to that is look at, try to be consistent. In other words, if you know you had project work in January and February, then if you don't have similar project work in during the test period, you're probably going to take a hit on that full-time equivalent calculation. But I don't know the details and logistics of how they're going to calculate that at this point. Okay, I don't remember what was below that, John, on the right.
This was just a summary, an example calculation. So if you have your list of employees, how many hours do they actually work? It's capped at 30 hours. So it's just to demonstrate on how you can calculate the FTEs.
Right. Okay.
And this would have to be done on a per week basis.
Yeah, that was that, and that again, we're not even sure of that. If you're a biweekly payroll, if they're going to let you use the 2-week period, make you use a 1 week, we're not sure. So hopefully you're on our time and attendance and you're doing it daily, and that'll make it really easy to do the calculations. So, so let's go to step 3 really quickly. And this is a little spending calculator that we put together for you. So basically those dates are right in the spreadsheet. When you enter your date that you got the proceeds, it'll put in 8 weeks worth of dates here. And I just tried to use this as an illustrator of what some of the things we've talked about. So this first half of the yellow part are your payroll costs. And again, those have to be 75% of the forgiveness amount. So we put a reference thing there. If you paid your landlord, you'd put that over to the rent field or in the non-payroll. But you pay your payroll, you put your gross payroll in that first column. And when you paid Aetna for your health insurance, you'd put that in that second column. Now you'd have to do the employer share only, but I didn't. This is more of a worksheet. Retirement you would pay, your employer taxes, you would build that all out. Okay, so this is just to illustrate. You can use this as a tool to kind of see where you are. So now you'd put your rent in, your more utilities, and I put some examples in there of your telephone bill, your internet, and now what it does is it's doing a little thing, a little calculation. Said it's accumulating your payroll cost for the whole period. It's accumulating your non-payroll costs, and remember that number has to be 75%. Your spending test there on the end, you want it to be greater than 75%. In other words, your payroll has to be more than 75%. So if you take that all the way to the bottom and go down, so now at the end of this period, you can see by the time we were done, the cumulative with the sample data I threw in there, we had spent $69,000 on payroll and only $13,500 on expense on other stuff. So we're 83%. So we're good. We're over that 75% threshold. So just for example, in the yellow column just to the left of your arrow, John, throw $20,000 in there. In one of those boxes, correct? Okay, so you can see now we're only at 67% because we spent more on non-payroll related. So that's going to limit you to only 17,000 of that in the calculation of what you can be forgiven. You're not going to get the whole 33.5 that you spent because it's more than 25% of the total, including the payroll. So that's kind of the way we're interpreting it at this point. Obviously, you want to maximize those other items so you get credit for it, or maximize the payroll to at least cover that 75%. Now, there's some weird things going out there with some accountants that are reading this very literally, some lawyers that are reading it literally, whereby if you hit 74%, you get zero forgiveness. I don't think that's the case. That would be really against the spirit of what they're trying to do. But the 75% number is fairly important in the forgiveness calculation. So hopefully this is a worksheet that you can use, and we're going to hopefully refine it a little bit as we know some more of the rules. They're talking about a May 15th date now as a release, or May 16th, I think they said. So I want to go to step 4, but this is the one that I'm not sure about. I don't believe that they've fleshed this out enough. This was the idea, and I gave you this worksheet as just more of just a, maybe this is a way of doing it. But the idea here is you look at your payroll for the first quarter of 2020. So by employee. So I just threw in some random numbers in here and said what was their compensation. You then annualize that, and then you divide by 52 and multiply by 8 to get what the equivalent of an 8-week period is. And now you'd have to hit 75% of that during this 8-week period. Otherwise, there's a potential of reducing your forgiveness. So, and that's all I just tried to illustrate here. Now, there's an exception. If they made over $100,000 in 2019, then they're not considered in this calculation. So you can see I made these first 3 people made over $100,000 in the prior year. So that's always going to be 0 in that far right column. So the one person here, Edward, that only made $4,000, where the equivalent of 75% of what he made in the first quarter was $6,000, potentially you have an add back to your forgiveness or a loss of forgiveness of $2,000. Now, what's unclear about this is, and I believe if I added another employee that didn't get paid in the first quarter, and then we paid them $2,000 in the 8-week period, like I replaced someone, let's just say Edward got terminated, or, let's move those 1,000s to the first 4 columns instead of the last 4 columns, and he got terminated and we hired a new person to replace him during the period. I think that offsets that $2,000, but the law doesn't say that. So the way the law is written, this could potentially, you could lose the $2,000 even if you hired a replacement. But we don't know the answer to that yet. So I just put it in here as kind of a placeholder. So see, like I don't have that. You can see the way the formula works, that doesn't put that 2,000 as a negative over there in that right column. So it didn't reduce it. So that's all I just wanted to illustrate with this. But again, again on the summary, I qualified that one. So hopefully this is a tool that will help you at least get a parameter of what your forgiveness can be.
And like we shared, we're going to continue to update this sheet, and we'll provide you guys with updates. And that's to say, we're actually going to be doing a series of updates on this webinar as well. So as we get more information, like on the May 16th, hopefully, or possibly sooner, we'll do some follow-up webinars to kind of talk about the clarification points that we're still waiting for answers on for the regulations.
Correct. All right, real quick, if you could, John, if you could go to the slides, back to the slides. I don't know, or do I need to? Okay, use of funds. Okay, again, I just want to reiterate that they're gonna, that's more of the point that I want to make with this. If you've heard in the news about some of the large companies that got the money, Ruth's Chris Steakhouse and a couple others, that they're putting the fear of God in us to say you're going to have to say that you deserve this money, and otherwise we'll consider fraud charges, and there'll be recourse. Remember, we said there was no personal guarantees, but if a shareholder uses the money and runs away with it, or a member or a partner for unauthorized use, they've said that they could create recourse for that particular shareholder. The point is, don't try to game the system, but plan accordingly, according to the rules, to maximize your forgiveness. Okay, go on, John. A couple other items. The forgiveness guidance, again, is still to come. I have a link here in the SBA has published a bunch of FAQs. They're up to number 45, I believe, as of yesterday or as of today. But most of the FAQs are about the application process, which you're probably already done with. But that's where we're expecting the update. So if you save this link and go check it every once in a while, we believe we see new ones here and there. For example, this repayment of your money back just got extended yesterday to the 14th instead of the 7th. The AICPA, I wanted to mention this. They made a bunch of suggestions to the SBA on reconsidering this time period. And I think they made some really good suggestions, and including don't start the day after you get the money, start the beginning of the next payroll. Another one they suggested was wait till we can open for business. Like in New Jersey here, like let's take a restaurant, for example, there's no way they have the same number of employees they had before. So they're going to get reduced forgiveness no matter what if they have to start the day they got the money. Because they're not back in business yet. They might be doing takeout with a smaller staff, but they're not in business. So there's a bunch of suggestions that the AICPA made, and I have a feeling that's why the new regulations haven't come out, because I think they're considering them very seriously. So there could be more to come with that. The IRS has determined, well, first of all, the law says that this forgiveness, if you get any, is not taxable to you. But the IRS has declared that the expenses that you use to get forgiven are not deductible for you. They followed case law in doing that, but Congress may intervene on that one. And then the other thing I wanted to quickly mention is if you got the $10,000 or less, it's $1,000 per employee up to $10,000 economic impact disaster loan advance, right off the bat, I believe 10,000 of your PPP will not be forgiven. In other words, you'll have to pay that 10,000 back if you've got that forgiveness. I'll qualify that a little bit too, because some are saying that if you use that money for other than what you use the PPP money for, that's not the case. But worst case is I would go in expecting to have to pay the 10,000 back, even if you hit 100%. So let's move on. Action plan. So you need to start calculating your baseline full-time equivalents. So looking back at 19 and then the first 2 months of this year. Begin planning your 8-week period out. Project out your payroll, project out what you're going to have in your utilities and everything. And then start making PDFs of all the supporting docs. Each invoice that you pay, go back to all your lease agreements, your subscription agreements. Again, remember, they have to be in place before February 15th, so they might be 3 years old. Go dig them out. Start putting a folder together of this stuff, because I'm guessing that your bank is going to ask for that. Maintain your head count if you can. There's hiring other people, alternative people, is important during this 8-week period. And then go grow your business, get creative. Don't just survive during this. There are opportunities out there. I realize things are tough, but there are opportunities. And with that, I don't know that we have time for a whole lot of more questions. I don't know, John, do you want to do a couple more questions, or do you
I think we'll field a couple.
Okay.
And before we start going into questions for those that have to jump off, I just wanted to share, when you're reaching out to Beyond Pay on a regular basis, asking a lot of these questions, we're doing our best to answer them. But a lot of these types of situations, you need to talk to a professional. And we have 2 email addresses listed right here. You're welcome to email to set up an appointment. You can also reach out to your CSR, and we can connect you that way. But you're welcome to reach out direct to schedule an appointment to talk with a CPA. We're also going to be doing future webinars around the PPP loan and possibly other topics. So if you have questions and of things that you'd like to see, please ask them, and that's what's going to drive future webinars. And I also wanted to share, we're actually working on a bundled solution between our payroll services, our HR services, and our accounting services. And we're going to be having a really nice package. So, you know, if you're considering looking for a new CPA to work with, you can consider Beyond Taxes. And we're going to have a really nice tight integration between Beyond Pay and Beyond Taxes. You know, to handle your general ledger and automate a lot of your bookkeeping, help allocate your expenses a little bit better. And then obviously to help out in these times of emergency that we're dealing with now. So I'm really excited about that. It's something we've been considering doing for a long time, and it's something I'm really excited about that I think we have a lot to offer in that area. A lot of expertise in the back room, and then because we have all these systems tied in, you know, we're able to get really good data to help you make decisions and help have some relevant discussions. But yeah, I think we have some time for questions. So let's go through a couple extra questions. I understand some people have to jump off as well, and that's no problem.
Right.
Feel free to grab a copy of the recording later.
Well, one question that came up, and I think it comes up in a couple different contexts, is that can I pay my employees hazard pay for being at risk and still be covered by the PPP? And my answer to that is absolutely. And that actually includes a lot of different pay. I mean, you can pay bonuses, you can pay hazard pay, you can pay severance within the 8-week period. Just remember, if you pay a big number, that it annualizes to over 100,000 a year. If you took that, you know, like if you paid somebody for, you know, for 1 week that, you know, more than $2,000, you're going to get limited to $2,000 because you know, so if you pay somebody $5,000 in 1 week, that's annualizes to much more than $100,000. So you're going to get limited. But from what I understand, all pay that you pay is included in these calculations. So, you know, that's why you have to plan this out in advance as you're working through it. Okay, what other questions do we have? There's a couple questions relative to cutoff, like your loan period starts on May 5th, but can I include 2 months rent because I paid my rent on May 1st? I think yes, but we're not sure of that yet. Again, I'm going on the accrual basis, and that's one of those unclear things. I mean, I did have some people that waited. If they thought they were getting the money on the 3rd or 4th of May, they waited and paid their rent on the 5th. So it's one of those things we're just not sure. I would say that, like, if I paid my rent on the 1st and everything started on the 5th, I now might want to pay my July rent on the 28th of June instead of waiting till July to get it in there to replace the one that I paid too early. So give it a shot, but stay tuned is all I can say to that. There's a question about transportation costs may be included. I haven't heard that as far as reimbursing your crew for going in, because you got to put people in separate vehicles. I don't believe for the PPP that's necessarily something, because again, think in terms of that being a new expense, not something that was in place. Think of the PPP as forgiving things that were in place before.
Did you address the taxation question yet, Jack?
I believe so.
Okay. I might have missed it.
Okay. Employees that are making over 100K, can they be included in the PPP reporting as part of forgiveness? Is their salaries qualify? Only up to $100,000 qualify in the forgiveness.
And it's a annualized $100,000. So it's
Correct.
not that they're paid $100,000 during the 8-week period. You have to do that annualized number, which of course makes it nice and easy to do, right?
Do self-employed folks need to secure a payroll company to pay this money to ensure it's tracked sufficiently for forgiveness documentation? I don't believe so. Not necessarily, not for themselves. You know, for taking draw, what I would say is, you know, take your normal draws during that 8-week time. Make sure, you know, at least up to the, you know, if you think about a weekly draw or a monthly draw, if you take $100,000 divided by 12, you're talking about an $8,300 draw. Make sure you take that twice during the 8-week period and at least get yourself to that draw. Now, the calculation is much more complicated than that, because if your business expenses, your net Schedule C is what they're really going to look at ultimately, but at least cover yourself by doing that. I owe an employee an annual spring bonus, which I did not pay. Can I pay it now using PPP? Again, that's one of those ones I don't know. If it's owed already, we're not sure if that's included in this calculation. If you decide to do it now, yes. If it was like a bonus that you decide to do now, but if it's technically contractually owed before the period started that you got your money, I'm not sure if that can be included in the forgiveness. There's a question, if loan is $1,000 and 75% of that 750 gross pay, or should 75% gross pay plus employer withholdings? The 75% that you need to use is everything payroll related. So it's your gross pay plus those other payroll type things, medical benefits, retirement benefits, and state taxes. Those have to add up to 75%. Has nothing to do with the withholdings.
But it also doesn't include the federal employer taxes. Only the state employer taxes.
Correct.
Yeah, and I see a couple questions on withholding, so it would not include withholding either. So it's basically what the company is paying, but you're minus the employer federal taxes. I see a couple questions around looking for a specific report, specifically out of Beyond Pay, and I can answer that question. So this is a complicated answer, and this is actually a really good reason why we brought Beyond Taxes into this. As you can see with this spreadsheet, you can't just simply calculate this out of the payroll system, because we don't necessarily have all the data and information available. And we don't even know what the information is going to be. So we want to be really careful that we don't just spit out a report out of Beyond Pay and say, okay, here's what you can use. You have to put some thought into this, and you have to do some analysis on it. It's not just a click it and forget it kind of situation. So you really need to talk to a tax advisor to track this. Now, that said, we do have a data export available through the system. And we'll be actually following up. There's some videos that we've already done that are available, but you can reach out to your CSR about that. You just log into the system, go to the system data exports, and there's a PPP loan calculator that you can use, and it gives you all the data you need to figure this out. Now, it's relatively easy to find the employer health the employer retirement, the employer SUI, if you're tracking that in our system. Not all clients are tracking employer health in our system. So that might need to be a separate calculation. But the tricky one is the gross payroll annualized under 100K.
Right.
So that's the one that you got to really pay attention to. So we can get you all the raw data. And again, this data export, this PPP data export is a really good starting point for you. But you really do need to talk to your tax advisor about this.
Okay, a couple other questions I was trying to address. Why did they cap it at 30 hours for the full-time equivalent when people are working 40 or more? That's really more of a calculation. In other words, the point is there that once they hit 30, they're full-time. So you don't include the hours over 30. Otherwise, you could have you would be creating more full-time equivalents, but it's still only one person. So the point is that once you get to 30 hours for a person in the calculation, you've hit one person. So just stop there.
And again, that 30 hours is assumed right now. We don't have that definitive. That's not law. That's not regulation yet. That's just a guess of how they're going to do it.
Correct. There's a question here about, and I'm just picking them off as I can and find them. Saw one here that
I see a good question. Do you count employees on FMLA? And it's our understanding that you do not count employees on FMLA because you're not paying them. So even though you might be paying them emergency FMLA through the COVID stuff, due to the COVID thing, you're technically not paying them. The government's paying them. You're just kind of fronting them the money, and then the government's reimbursing you. So generally speaking, you're not going to be including employees on FMLA. That gets a little bit complicated if your policy is to pay leave. So if you're paying a portion of leave or something like that, I don't know the answer off the top of my head in that situation. But if they're on FMLA and they're not being paid by the company, or they're being reimbursed through the COVID FFCRA, then they would not be included.
Here's a good question. If we furloughed 10 people 2 days before we received PPP funds, 3 have been called back, and we expect to have the rest returned prior to the end of our 8-week period. Will that qualify us to receive 100% forgiveness? And that question is that one that's in that full-time, or I'm sorry, that employee compensation sheet that I said is very unsure. The dollar amounts that are used to pay these people during that time period will definitely be forgiven. But whether or not they count as full-time equivalents over the course on an average of a week or the whole thing, we're not sure of that answer, of how to answer that at this point. Because there's also a little provision in the law that kind of said something along the lines of, as long as you've restored them by June 30th or by the end of the 8-week period, you've gotten there. So we don't know if there's if you get them in there by week 7 or week 8, if that automatically eliminates that full-time equivalent element for that person. So all I can say to that one is kind of stay tuned, because we really don't know if that's gonna happen. One thing that they did come out in the FAQs and said, if you offered someone to come back and they refused to come back, that will not hurt you in the full-time equivalent calculation if you have that documented. So in other words, you do a written offer to say, we want you back, and they say, well, I'm afraid to because I don't want to catch COVID-19 by coming to work. Then if they do that in writing, you've tried to get them back. It's not going to hurt your FTE calculation, is what they've said, but we don't know the mechanics of that.
Another good question, talking about the difference between salary versus hourly employees. There's no distinction on an hourly versus a salaried employee. So for a salaried employee, you need to figure out if they're actually a full-time employee or not based on their worked hours. So if they are scheduled to work 30 or more hours, or again, I'm assuming that 30 hours, maybe it'll be a different number, but assuming that 30 hours, if they work 30 or more, they're considered an FTE. So you treat hourly and salary the same. The only thresholds that they have are on that over the annualized over $100,000 that they're paid. That's where there's some reduction of calculation. You can't include wages paid over $100,000 of an annualized salary. But it doesn't make a difference whether they're hourly or salary employee for purposes of the calculation.
I see a question here. So the 60-day period for the bank to forgive the loan is not a guarantee if the SBA has a 10-year look back. And, whether they have a 10-year look back or not, what they said to the bank is you have to maintain the records for 10 years. So my presumption is that that gives them a 10-year look back, but I'm not sure of that. But I don't know that it's a guarantee.
What about this question? Can bonuses be added for the next 8 weeks?
Yes, as long as they don't exceed the annualized $100,000.
Yep. So if you're falling short on the 75% calculation, you're not sure you're going to make it. Spreading out a bonus to all employees is a good strategy to meet the 75%.
All employees that don't already make $100,000.
Correct. Yeah, correct.
What about disability insurance? The company pays part of it. I believe that the answer to that is yes, because that is a payroll-related insurance, and it's along the lines of unemployment. Every company usually has a disability element within the state programs, but if they have private disability, I believe that that's along the lines of the medical. If you remember, I talked about dental and vision, and I would put disability in that same boat. But again, stay tuned.
Question on hours worked. What report in Beyond Pay shows hours worked? I'd reach out to your CSR on that, but a payroll register would show it. A pay statement history detail, a labor distribution summary would show it. If you're using time and attendance, there's a ton of additional reports. If you're using payroll only, there's a handful. But also keep in mind that it's only as good as what you report. So if you have salaried employees, you'd have to, if you're not typing in hours worked for salaried employees, you would need to, add that to your spreadsheet. And you can include paid time off. So if you had 8 hours of paid time off versus 32 hours, that would be 40 hours for the purpose of the calculation.
There's another question here on how are tax for over 100,000 employees calculated for forgiveness. And that one, again, it's the state taxes that are included. I don't believe they're going to get limited to the the $100,000 is your gross pay, period. And if you think about it, most state taxes have a limit on the employer share anyway, up to the first $40,000 or whatever the exact number is. So I don't think that's an issue. So it's really going to be the employer share of the state taxes, not limited to the $100,000. There's a question again here. Does payroll costs include employers' portion of FICA and Medicare expenses and the payroll service bureau expenses? And the answer to those are no.
No, you can't pay Beyond Pay extra to help you towards the.
Well, you can pay Beyond Pay extra.
It won't help you.
Should we not, here's a question, should we not do anything with the funds until the SBA releases guidelines on forgiveness to be safe, or do you think we have enough information to proceed taking every precaution? And I believe that you have you at least can run your payroll, you can absolutely use the funds. You've borrowed the funds and you're authorized to use them, and again, the repayments don't start for 6 months, but there's no prepayment penalty. So you could at any time pay the money back. Whether, because even if it's not forgiven, you could pay it back later, earlier, or you could wait and do it over the 2-year period.
I know you addressed the question early, but I've seen the question a couple times. You know, do you have to use a separate account? Like, do you have to fund your payroll with the loan proceeds? And that's not. We're interpreting that that's not necessary. So
Correct.
it's a tracking thing. You know, you're using a spreadsheet to track your expenses, and you're reporting that over the course of 8 weeks. Once you get the money, it's all kind of jumbled in. It's all our digital money is just kind of all sitting in one bucket. It's up to us to track them to make sure that you're allocating the correct expenses at the correct time to the correct place so that you can
Correct.
maximize your forgiveness.
Correct. But some banks are saying you have to keep it in our account and run it as a separate account. So they're forcing people's hands. I think that's not the correct answer. But if they, so we have had it happen, but I don't believe it's necessary. If employees is the annualization calculated over the whole 8-week period or is it week by week? And we don't know the answer to that. My worksheet, I did it week by week, mostly for simplicity, but I don't know the answer to that, whether it's going to be a average over the 8-week period or whether it's week by week.
That's a good question. We debated that question too, and we looked into it, and
we don't know.
Yeah, we don't know.
Because that's how we were designing the spreadsheet with that in mind, and didn't know how to put that. I almost just put one number for the 8-week period in the spreadsheet, and then I decided to do that so we have it in case they said that.
Yeah, and it could be both. You know, it could go a bunch of different ways. You could have to calculate both ways. You could have to calculate it weekly and over the 8-week period, and then figure out the lesser or the greater, or they might have you just do one or the other. We don't know.
Here's another good question. Will workers' comp insurance be counted toward the 75%? And I don't know the answer to that, but I hope so. I believe there's a little flaw in there that talks about all insurances. And if they come out with the regulations for that, I think that could be a real helpful thing. Although they weren't considering workman's comp in the amount you could get. So that kind of works against that possibility. But I hope so is the best answer I can give you right now, whether workman's comp will be included. And it looks like that was asked a bunch of times in our list, Liz. There's a question here. I thought the head count of employees as well as the amount paid are the two factors, and that's absolutely true. The full-time equivalent is the head count, and the employee compensation is the other piece to that. And we don't know how they are going to work together at this point.
Yeah, another question. The spreadsheet only pertains to salaried employees, not commissioned employees, which varies over the course of the year. Again, that's the same concept where we just don't have guidelines. You know, if you have a commissioned salesperson in your baseline and they're paid sporadically throughout the 8-week period, and then maybe another salesperson is terminated and now you have a new salesperson, does the new salesperson replace the old salesperson? But it is kind of clear that if the salespeople aren't producing during this time and don't make as much money, that will affect your calculation.
Here's a question here. I think I addressed this. Just received our PPP dollars yesterday. Our business is closed due to government orders. When does the 8-week begin? When we open again, or do employees have to come off unemployment now? As of right now, it's the day you got the money that you'd have to start paying to calculate forgiveness, and they'd have to come off unemployment. And we've had issues where people don't want to come off unemployment. But that's where I mentioned that the AICPA has made recommendations to delay that and wait till you're open. So stay tuned if you have that issue, because as of right now, it's still, the law says the day you get the money. All right. I think we'll try and get back to some of the other ones. I realize we've gone over our time suggestion by
we've
a
got
little bit.
more questions coming in too. So yeah, we're gonna have to cut off on the time at this point. But we will go through your questions, and we will do some follow-up webinars in the future too, and can structure them accordingly to reach out. And then we'll also share a copy of the spreadsheet. Also stay tuned for instructions to download the PPP export from your payroll for Beyond Pay if you're with Beyond Pay. Yeah, stay tuned for more. And also Beyond Pay has the COVID-19 FAQ page. So beyondpay.com, click on COVID-19. We're collecting resources and posting them there. We're going to store a copy of this webinar there. And also don't forget to take us up on our offer. If you're looking to talk with a CPA about your specific situation, and you talk about working at it from an accounting perspective, there's 2 email addresses on right here. You're welcome to reach out and schedule any time, or reach out to your CSR and we can connect you that way too. So thank you, Jack. Thank you for your time. Thank you everybody for joining. This was a greatly attended webinar. So that's, I hope it was relevant and helpful, and we hope to present some more in the future. So have a great rest of the day.